Good evening. Ira Epstein of Linn and Associates with your SPDR ETF wrap-up, and this wrap-up is for Tuesday evening. I think on my other videos I was saying Wednesday. It's Tuesday evening. I'm laughing at myself. The 18th of August. Tomorrow's Wednesday. Don't know what I'm doing there, but I'm not the I'm laughing at myself. I can't get my days right. As we take a look at all that's going on right now, we made new highs today in the S&P and the QQQ. So SPY, QQQ, those markets are running. It's a tale of different stories, though, in the Russell and as we get over into the Dow itself. They were the laggards today, and the breadth of the whole market wasn't there. So it was more select stocks than it was the whole thing moving together. I found that interesting, and it could be a warning sign. You know, at some point this market's going to give you a correction for whatever reason. Tomorrow we get the FOMC minutes, if I'm correct. We had tonight the API numbers on the crude. They were pretty neutral. I don't see any reaction going on in energy futures from that at all. So let's take a look, if we could, at the individual charts. And remember, what we're going to first do on this, if you're new to it, is we're going to take a chart and we're going to build it together with a set of different indicators, teach you what those are, and then we'll carry it with all the indicators in the next series of charts. So we're looking at XLK. This is a bar chart. There is a gap in the chart right here that hasn't been filled. I've been prepping you that if the market wanted to run, one of the things it could do is set itself up and get another gap to the upside, so you'd have what's called a breakaway and then a runaway gap. Either that or the market eventually comes back to fill this gap. It's generally one of the two, so we're going to see what happens. This is called a swing line. And what a swing line does is it takes this chart and you're going to attach to today's low or high a line. The swing line's taught in my charting course, and the purpose is to see, is the market in a pattern that we can call bullish, bearish, or neutral. I define a bullish trend as one that has higher lows and higher highs. You have that. Higher lows, higher highs. You had an outside day up today. That means you took out yesterday's low, high and low, closed higher today, so the line is drawn to the downside. I teach all this in the course. I don't want to see today's low taken out if this market's going to stay strong. That would be a warning sign something negative is going on. I talk about that later. Now you've got moving averages. This is the 18-day moving average of close, the 100 and the 200. Overall, I look at the 18-day average of closes as the line in the sand. It does several things. Number one, I think that's the number that the market decides if it's going to be bullish or bearish from. Number two, if the market's above it, it is not uncommon to run back to it to see what you're going to do next. If you break under it, to go back to it and fight a battle there. I look at that all the time. Number two on it, or number three, whatever you want to call it, it acts as a filter on the swing line. If the swing line is bullish and prices are underneath the 18-day average, I say the two counter themselves. But when you get the swing line saying higher lows, higher highs, and you're over the 18-day average, then the bias is with it. So I've got the trend up and the bias up. I then plot on the chart where could resistance come in. Now I have several different ways of doing that. I do not show you all of them here. They're all in my afternoon paid for, I want to repeat it, paid for subscriber video. This is the freebie. If you think this does what that does, you're seriously mistaken. Not even on the same planet, as I call it. Very different. But suffice to say that if the market's going to get a run in the market, not just coming up like it is, maybe the upper Bollinger Band will be the resistance. Why? The Bollinger Bands are an algorithm designed to keep the market trading within them 95% of the time. Therefore, as you go, you'll see you rarely stay over them for any real length of time or under them. Therefore, the first time you hit them, it's a spot where I think the pros build into their algorithms ideas that maybe that's a good area to lighten up so we get more buying or selling power. There are rules upon rules with it. You can imagine. You'll sometimes get one that runs the Bollinger Band. You have to be able to recognize that. What does that mean? We have ways to do that. But we do that in my subscriber video. Here it's a general. So the trend is up, the bias is up, a possible target's 118.38, and I really don't want to see the low of an outside day taken out within 2 trading days. So either on Wednesday or Thursday, because that can often lead to a pullback to the 18-day average of closes. The next thing that I look at is where is momentum. So momentum, you see both numbers are over 80. They were over 80 yesterday and the day before. That's called embedded. Markets switch from being overbought and oversold to what I call locked in. I could have called it locked in, but I decided to go with the word embedded when I came up with this idea about this whole thing. And until that's lost, with the red line closing under 80, I say that the market is going to be well bought on breaks by the pros looking to see what's above the market. In SMH, now everything's going to be on one chart. We have a similar pattern, higher lows, higher highs, but a different pattern here in the sense you made the new high or went up for a new high in this leg because that high was right there about there, and you have an outside day down. That's a warning sign. What about the slow stochastics? Well, they're both over 80. They were over 80 on Monday and they were over 80 on Friday, so they're embedded. If they lose the embedded reading with the red line under 80, then the problem is I'm looking for the 18-day average, and that means momentum will be lost in the market to the upside. That is not good. So what does this market have to do? A sign it's going to hit the upper Bollinger Band would be taking out today's high, and that high was 174.33, and then I've got a target of 176.05, and that's how I think the pros would jump into it. I think they're going to watch that, and if the market looks like it can jump, I think they'll see if they can press it. In the XLI, I'm looking right here, and you've by the hair like that, you're holding on to it. This is a dangerous trade right now. This could be losing the embedded reading even on an update tomorrow, the way the math is going to work on the slow stochastics. I do not like what I'm seeing on this chart. It's not trending. You've got in the chart higher lows, but now you've got lower highs. Let somebody else have that one. In XLE, I don't like this. Sideways action completely. We call that a pipe. And in a pipe, you get whipped around both mentally and financially, often. And what happens is you're just spinning, looking to either make a major bottom or a major top. I will let the market tell us which one of those it is, or try to guess with it which one it is, and after the fact, try to come in. QQQ, I'm bullish as can be. You still have an embedded reading. You put one together again. You've got higher lows, higher highs. You had a pause in the market right back here. Now, when you lose an embedded reading, it is common, if you lose it, to go back to the 18-day average or the closest main moving average right below the market. In this case, it was this one because your 100-day, your 200 are there. Now the market's reinstating the bull trend. You've got divergence between which indexes are doing what, and we're going to see which one is the stronger to pull the other two with them. Is it going to be the QQQ and the SPY are so strong they can carry the Dow and the Russell? I don't know. But this is still looking very good until you lose the embedded reading. The EFA market, this is the emerging. If we take a look, do we have an embedded reading? Both numbers over 80. Over 80, not over 80 on Friday. You do not. You're just overbought. So, overbought markets that hit upper Bollinger Bands, why are you pressing the market? That's what it comes down to. Yes, the trend is up, but targets have been hit and you're overbought. Let it embed, and then we change the thinking on it. In GLD, bullish. One word, bullish still. Momentum up. Bias up. Bias actually yesterday turned up with the close over that. The support in the market is the 18-day average of closes. It tried to get back to it today. It missed it by 7 cents. In the futures, it hit it perfectly. And that's the one that then rallied like this, right on with it. Actually, the futures got up to like 2013 or something, fell to 1985, and then came roaring back to 2020. A pretty powerful move. They went right back to the 18-day average and held it. I'm sorry that one didn't, because that's where I think the pros are looking to buy. You might ask, what do you do with the gold miners. Well, here's the thing that's interesting. You have a gap in the chart between this day's low and that day's high, and that day's low and this day's high. You got to take off the swing lines. I did it in the subscriber video. You've heard of island tops. Why can't you have a bottom that is like an island? And that's what you've done here. If this doesn't get filled, it turns out to be very bullish. But you've got to wait to see what it's going to do. If you buy the market, the buy is against 42.37, and your stop in the market's got to be 39.71, right under that last break low. So that's what I think the pros might do. I'm not telling you to do it. That would be it. I don't think as a pro I want to see those gaps filled. I think it's a stronger chart. Just hang right here and start moving up again. It's going to look pretty good. Gold starts moving. You do realize all that gold in the ground makes those miners, whether they're mining or not, their leases become worth more money, or their ownership of the ground. I don't know which they've got. In the TLT, I think the market is saying, I want to see tomorrow's FOMC notes. They come out at 1 o'clock Central Time, and I'll decide what I'm doing from there. This is called a vertical price break, almost impossible to catch. It just goes straight down. It's now moving sideways. I don't try to play markets like that. In the FXE, what number did you just hit? When you haven't hit a Bollinger Band for a while, which you didn't, the first time you hit it, I think the program is that the pros take money off the table there. They're not bearish. I think they're going to look to buy again, but you're overbought. You hit the upper Bollinger Band in an uptrend. Does not mean you can't run higher. Does not mean I'm saying I'm bearish. It does mean there's a point where you take money off the table. I think you hit it there today. So as I'm saying to those of you, because I get people say, you know, Ira, I can watch these videos and get what you're doing in your subscriber video. Let me make an assurance to you. Not even close. Not the same planet. The same universe, not the same planet. Because you're not going to hear me say, I want you to buy here. I want you to put a stop. This is your profit objective. This is your game plan. And then do it for both daily and on the weekends. You heard me on the weekends. Do it on the weekly charts for you. So I give you the long term and the short term, all as part of one. You're going to get points of entry, information about the markets, what reports are coming out the next day. I've already done it today, so I'm telling you what's been done. We're going to cover, right now we're up to 36 of these. BETS is in there, BETZ. There's a couple that I don't have yet here, but these are all the markets that you see me covering. It's all the big names. And detailed chart analysis. I want you to do this. I want you to do that. Here's why I want you to do it and where I want you to do it. So if you're your type of trader, I don't want to be guiding you. I want to be your sounding board. If I'm saying this and you're going, I was thinking of getting long. Wow, Ira's going short. I'm thinking of going long. Ira's trying to get long. What does that mean on my analysis? Don't you wish you could turn to somebody and talk about that? That's where it's at. And yes, I hold live webinars. That's included in the price of this subscription as well. No extra for that. And you get to ask questions. We had 73 questions in a 1-hour webinar this past Sunday. It was full of my subscribers. We were pretty well sold out. So if you'd like to give this a try, go to our website. Under the word research, give it a try. You're out the price of a Starbucks plus a tip. Not much more. I'm Ira. You have a good day. Talk to you tomorrow.